Let's talk to Jeff Kendrick, Head of European Foreign Exchange Strategy at Nomura. A Greek exit's now the central case. What's the downside target, euro-dollar?
We're currently just thinking about our forecasts, and clearly if Greece leaves, we're going lower. We're thinking a target around 115 is probably fairly sensible, something 110, 115. And that is the scenario where Greece leaves, but we don't see huge contagion. Yeah?
Right.
So the next big story beyond Greece will be what happens after that. Yeah? And realistically, you need to see the ECB as the only player in the market who can make a difference, step up in size. If they do that, euro might only go to 115-ish. If they don't, we're thinking about Spain.
OK. Do we get huge bank runs across Europe? Do you think the ECB will be able to cope with that? There's so many unknowns here that you're kind of whistling in the wind when you're trying to work out exactly what's going to be happening. There are so many forecasts. Some are good, some are bad, some are downright dangerous. Trying to trade in that environment could be very difficult.
It is very difficult. It's also very difficult to know how far the market has come. Yeah. So arguably between now and the Greek election in 4 weeks or so from now, we know most of the bad news. Let's assume the election goes badly. Probably on the Monday, if you haven't had an announcement from the ECB on the weekend, everything will start selling off in Europe. Clearly stocks will be down, possibly Greek banks will close for a short period. Between now and then there'll be deposit runs on Greece, etc. So for Greece it's very bad, and for the Greek people very bad. The question then is what happens in Spain and Portugal and others. I think the only solution is the ECB. They need to massively ramp up the S&P program, or do LTRO 3, or do genuine QE. I think that's the only solution, and I suspect Draghi will be forced into that by what happens in Greece.
Is euro-dollar the best way of playing it?
Probably for now, it is euro-dollar. It has been euro-sterling as well. As I think forward to the next game, which is an ECB QE of sorts, I'm thinking about gold. So we went long gold against euro yesterday. I think gold-dollar is starting to make sense down here as well. And possibly between now and the election, actually selling short-dated euro-vol on the view that we've come a fair way, there's a lot priced, and it's only after the election where we'll probably get the next leg lower.
Do we see significant swap lines around the world being sort of extended, reopened, just making the liquidity story that much easier? Is the Fed involved? Is the S&P involved? Is the BOJ involved? How does that work?
It's very possible. I mean, it probably depends on what the ECB's reaction function is. So realistically, this is the ECB's problem, if you like, but they have been slow to react in the past, and we know that the Fed will step in if needed. So the swap line story, I think, is a very probable component, but if the ECB step up more quickly, that might not be needed.
Coordinated rate cuts?
There's not much to do, unfortunately.
Well, yeah, I appreciate that, but what kind of swap lines is one thing, but do you think on a Monday morning the world's going badly, do you think we get some sort of coordinated action beyond simple swap lines?
I think it's possible, but the US have been trying to advise Europe for some time. Remember that Geithner has been going to a lot of the meetings in the last 6 months or so and basically saying to them, please go in big, as per what the US did with TARP in 2008. The ECB haven't done that, so it depends on if they actually step ahead and the US say, okay, this is your problem, or if they don't and the Fed are forced to jump in, if you like. So ideally, from a market perspective, the Fed and the US are still very credible. So if they do come to the party, and so it's coordinated QE, if you like, then that would probably be a genuine backstop.
I've got a couple of quick questions. Does the S&B do anything when the 120 floor is broken? Because it will be under this kind of scenario.
Actually, I think if Greece leaves, the S&B will be successful. So my core scenario remains that 120 is still 100% credible. Greece leaves, the ECB step in and save the rest of Europe, to simplify the story. S&B can hold 120, but clearly if we go for Spain, etc., S&B is in trouble, and particularly if you go into the scenario where the Eurozone may not exist, right? Clearly then you can't have a floor, but I think there's a lot of bad things that need to happen before we get to that story.
Does money leave Europe? Money's been recycled round Europe thus far. Look at the spread, Spain over Germany. You've seen that wide now, but money's going into the Bund. Does money leave the Bund? Does money leave Germany and exit the Eurozone in its entirety?
We've seen a little bit of it. So mostly in the second half of last year, it was European funds bringing cash home as their peripheral spread positions were selling off, and so they need to bring cash from the US. That stopped, and now we've started to see some net money going out, but we haven't gone into that final game yet, which is real money accounts in Europe and Germany and etc., sending cash offshore. So we haven't seen that, but it is definitely possible. It could actually happen in either scenario. So if we get a solution, bunds will sell off massively. Yeah, so
Yep.
even those very safe bund positions, which are now sub 1.5%, some people talking about 1%,
Yep.
will sell off. So at some point, whether you think a bad thing happens or a good thing happens, you really want to be starting to get out of those. So you can't just stay long bunds forever.
Should the Bank of England be buying foreign bonds under this scenario to try and keep a lid on sterling?
I suspect they're debating something like that. The minutes yesterday obviously were much more, well, not much more, but certainly more dovish. So the possibility of more QE down the track is still an open option,
Yeah.
if you like. That's probably what they're thinking on the currency now, which is talk.
Yeah.
Mervyn King always tries to talk the currency down. That was somewhat successful yesterday, actually.
Yeah.
So perhaps euro sterling stalls here. But bigger picture, gilts are credible, and the UK government is relatively credible. Yeah. So those inflows, which are coming into gilts, will continue. And if Greece leaves, I think euro sterling could touch 75 later this year.
Jeff, nice to see you.
And
Thanks
you.
for your analysis. Jeff Kendrick joining us from Nomura.